Hi there, this is the last video for chapter 9, and the last topic of chapter is, can you make a guess? Yes, as you did, as we had at the end of chapter 6, it's analysis, meaning accounts receivable turnover and average collection period. Turnover, which is defined as, again, all of the turnovers have sales or cost of goods sold as the top number, numerator. And at the bottom, it is the average, the thing. What's the thing? The thing turnover. So the denominator is average accounts receivable. And the top is either cost of goods sold or sales. Then which one should be the numerator in accounts receivable turnover? Between sales and cost of goods sold, which one is more closely related to receivable? It is sales. Yes, so it is sales. The textbook says it should be net credit sales. But in reality, net credit sales figure is not always available. So in reality, we just use net sales as the top number. And then average collection period or days in accounts receivable is defined as 365 divided by accounts receivable turnover. Very similar to our days in inventory and inventory turnover definitions. Okay, it's not fun having looking at the formulas themselves, right? We are not in a math class. We are in the end in a business class. We are not data engineers. We are data scientists, right? We need to apply the formulas and then retrieve some implication for the business. Let's practice as we did for the inventories. Let's practice retrieving data from Bloomberg terminals for Ford and GM. Again, in the terminal, the search window, you type in Ford ticker, which is F, and you have a lot of Ford F related things. One of them is Ford F US equity. Click it. And then the same links, financial analysis. And then click key stats, income statement, balance sheet, cash flow, ratios, please click it. And then from ratios, profitability, growth, credit, liquidity, working capital, please click the working capital. And then you have accounts receivable turnover and days sales outstanding. Okay, we want to download it as export Excel current template. Okay, and then you have here the numbers that we want. Copy and paste onto your local Excel. Is it copied? Copy. Again, copy. You're not helping me. Copy and paste onto your local Excel. Come on. One more. Copy and paste onto your local Excel. Okay, done. And let's get the data for GM. Type in GM, Search for GM US equity, click it. Financial analysis, ratios, working capital, export, Excel, current template. Copy and paste. Let's add one, insert a column, label it as Ford and GM. Too small. Erase all redundant ones. And let's erase it. Days sales in sales outstanding, DSO. And let's change these dates as years. 2011. Let's change from dates to numbers. And let's erase the decimal point. And then just this is to be 2020. Copy and paste. And then click fill series. Then it fills the cells, converts to series. Okay, and then click the data, insert, chart, line plot. Cool, done, right? What do we see? Ford days in days sales outstanding. What does that mean? If the days are shorter, then it means the account receivables are quickly being cashed, which is good, right? Your customers are good in paying back cash. But if it is relatively longer, like 165 days, then Ford needs to contact their customers, constantly emailing, calling, and knocking their doors, saying that, my cash please, my cash please, my cash please. Ford had to do it only for 11 days, but in 2020, they did it for 165 days on average, which is not good, definitely. What's happening? Ford's DSO surges, right? From around here, the value is coming out, 14 days to 136 days. What's going on, right, over the 2 years? Well, the increasing trend was the same for GM, but it is not as dramatic as, GM's case is not as dramatic as Ford, right? Indeed, at the beginning of 2011 and 2012, Ford's situation was better. The DSO was lower than GM, but now it is reversed, right? Ford's DSO is much higher than GM's. What's going on? I think we saw a similar pattern for DIO, right? Days inventory outstanding. Something is off with Ford around this year. I'm not sure what that is. Now we know we need to do something, right? We need to investigate the company, right? That's what we need to do outside the accounting class, right? Based on the data, we recognize there is some problem. You need to dig it out, right? Okay, that's the end of chapter 9, and see you in the next video talking about chapter 10.